The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Another round of consolidation in the grain and oilseed trade on Thursday. Kind of the same story in livestock, too. A little bit of a wider difference between cattle higher, hogs lower. But overall, that's probably about the best way I can explain it, at least, is what we saw heading into Friday with a key WASDE report on tap. Maybe we'll get a better explanation of the trade action from Thursday from our friend Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Thanks for joining us today again, Bryan. And that's the best way I could put it, was kind of consolidation type trade. Maybe you have a better explanation.
I think you got it. You hit the nail on the head. So, and really, that's been the way in the corn market here the last several sessions, give or take a few cents either side of $5. Today, the futures gained 2, closing at 496 and a quarter. But it looks like this is the third time now this year that we've gotten under that $5 mark, and there doesn't seem to be a lot of appetite to really sell it off. Tomorrow might be a different day. We'll see what the USDA report says. The average analyst estimate is 175.5 bushels per acre. Last month was 177.5. So some weather challenges have analysts trimming the number. But then again, the way the market seems to be trading, or what we're hearing from producers and seeing from others, really is that I'm going to make the argument, a crop that's been on the mend the last 2 or 3 weeks. We saw some really big concerns a couple of weeks ago over this, heat and drier weather. And then that was quickly followed up with a cool down and really a lot of timely rains, and providing some better feel for what their crop looks like for many farmers.
Well, and to your point there, a couple things with corn. I've heard chatter on both sides of the fence. I've heard some farmers say, you know what, hey, this recent rain has helped us out. And I've heard some farmers say, my corn crop just doesn't look very good, and this drought really did a number on things. So it'll be interesting to see what USDA has to say on Friday's report. But you think about taking those anecdotes together and then looking at a chart. To your point, we get below $5 in D's corn, and then we just kind of start to chop around, waiting for the next news cycle to feed the bull and try to lift us back higher, Bryan.
Right. And if you think about it, let's step back a little bit. You and I talked all winter about corn market kind of on a slippery slope, and then we got some dry weather in Argentina and kind of helped it stabilize, but then Brazil had good weather. But we've had two let's call them sharp rallies. Both came on hot and dry weather, and the rallies left faster as soon as the forecast flipped, where somebody started talking about cooler temperatures, cooler with rain. And we saw the same thing last year. So the market is very trained that whenever there appears to be a change in the forecast, it can go defensive really quickly. And so if we were to just take away those two rallies and just look at what the market's been doing, it started out in the fall at about 625, and we're down around $5. And we've got a good crop on the way for corn, good crop on the way for beans. Time will tell, boots on the ground here with the Pro Farmer Tour and some of these other private things that are going to happen. And then the September USDA report. But we've got a crop coming. And I think the quick dropout after rallies is just indicative of that big picture perspective of increasing supply expectations throughout the world and just poor economic conditions in parts of the world, in particular China, which is maybe now into a deflationary window, and their exports are down. They're just not a big economic powerhouse here, or perceptively a powerhouse over the last several months, and not expected to come in and scoop everything up as we've seen in other years where that might be the case.
Speaking of economy here in the US, I know we got the consumer price index out on Thursday morning. It seemed like stock market traders were jumping for joy as everything came in as expected, but man, the stock market really just kind of fell apart as we went through the day. So maybe if you peel back the layers of that onion, maybe not everything as hunky dory as we like. I don't know there, Brian. It was kind of an interesting trade.
I think there's a lot of dynamics in the stock market and a lot of things worldwide, what it really looks like and whether or not the economy is really healthy or consumers are spending. One of the reports that we saw this week was really just a massive buildup in credit card debt. And so not only did the American consumer spend the stimulus money, now they spent themselves into debt. This doesn't seem like a good recipe to me. That concerns me. That's why things like the live cattle market where we're priced, I'm concerned demand could all of a sudden just hit a wall. And we have to, and with China's numbers too, we have to recognize that in a high price market like cattle. I know it's supply driven, but it's also demand driven. I think the consumer just they're buying anything, that everything's in the inflation mix. But when it gets sticky, I think I'm a little bit more concerned about the beef market than any other market.
Brian, I want to look at a comment from the Market Talk YouTube channel as well. John Miller commented on Wednesday and said his take with corn. He said he feels like corn's oversold, and if WTI crude goes higher, corn goes higher. Do you agree with that? I mean, we look at this crude market, a little lower Thursday, but still holding well above 80, 82, 86 ish is the last I saw. I mean, if crude goes higher, could that be supportive to the corn market, Brian?
It can. So a lot of times the trade will trade investors. They trade a basket of commodities, and if energies are in that basket, which generally they are, and they're hedging inflation or hedging commodities. The energy complex has a lot of different contracts. It's got RBOB contracts. It's got crude oil contracts. It's got several contracts. So if they're across the board buying in the energy complex, historically that's had a tendency to sort of lead commodities one direction or another. And that's kind of the head scratcher here is you've got yearly high prices for crude oil, but you've got corn kind of hovering around the $5 mark. So I'd agree with that. The problem you have is time of year right now. If the market feels confident that there's a corn crop coming, I'm not so sure the end user or the speculator is going to jump at this thing real hard right now. But once we kind of get that under our belt, and we look around the world, if there's any disruptive activity and you have high crude oil prices, then look for commodity market to rebound. But right now, I think the overriding aspect is we're getting a corn and bean crop over a hump that was thought almost impossible to get over, but incredibly timely rains and moderate temperatures at the right time have helped.
Looking at going into Friday's report, I know soybeans have the best story, the tightest balance sheet, the best fundamentals to them, it seems like. And I think that was reflected some on Thursday with new crop beans trading higher. What's your thoughts with this soy complex overall as we head into the August report, Brian?
Great observation. And when you look at the price of beans in November, $13.18, and you look at December corn under $5, that's telling the story you just mentioned. The last month was so interesting in that acreage was lowered 4 million, and yet carryout went up 100 million. How do you do that math? Well, you got to cut exports, and you got to bring some beans in from the previous year. So what'll be interesting is the yield number tomorrow on beans. That'll tell the story and set the tone. If the USDA comes in with a 50, I think all of a sudden that's really, really bullish. Now you take projected carryout from 300 million down to about 150 million, let's say. But if they come out with a 51, that's what I think most people are anticipating. Average yield is 51.3, probably a no-brainer or a non-event. If they come out at 52, then we're a little bit more concerned because that aligns with last month for 2 months in a row. And with the recent rains and good reports from farmers that the plants perked up and they were kept alive until August, that maybe there could be a 52 bushel yield. So a lot of dynamics to unfold, not only with tomorrow's report, but with the weather, and then some of these crop tours that'll get underway soon enough.
We're having a conversation today with Bryan Doherty from Total Farm Marketing. Bryan, let's go to livestock. And you mentioned earlier in our corn and economy discussion, you're a little more concerned about the cattle market, or at least, would be here with some of the factors going on there. So walk me through what you're feeling in this cattle market right now. We did see a higher trade Thursday. I know August live cattle getting up to a new high for a time. But what's your thoughts in cattle? It feels like to me, this market's been getting kind of toppy here the last few sessions.
Both bulls and bears have some things they can kind of sink their teeth into here. So what concerns me yet, I'll use that August contract as an example. Back on the 20th of July, the market posted an all-time high of 182.97 and a contract high there, all-time contract high. And then it reversed down that day. So that's called a bearish key reversal. The market kind of sagged after that. Now it's bounced back. And today's high at 181.70, it's still below the contract high, 182.97 there. So the point I'm getting at here is we haven't exceeded that previous high. It's a big reversal. The market's made a nice little comeback here. But I can also make the argument that August cattle are trading on the futures market today the same as they were on the 12th of July. So it's been a month and we're at the same price. So some would argue that's good consolidation. Others would argue you've lost your upward momentum. I'd probably go with the momentum indicator right now because we're where we are time of year, August 10th. The summer grilling season is going to start to wane a little bit. I don't know if the consumer has, kind of the mindset to go out there and continue to buy high price. So that's what concerns me. On a big picture perspective, that we're taking the ladder up or the stairs up. We might take the elevator shaft down pretty quick. I'm defending this with put options, trying to leave that top side open to see if this market can't make a run to 200, but I'm not betting on it at this point.
Well, I know weekly export sales for both beef and pork, really nothing to write home about. And then you look over at cash cattle country to see if that would give us any indication of what the board might do. And I mean, cash cattle country has been kind of stagnant. We're getting some 177 live bins in Kansas and Texas, a 188 live bid in Nebraska, and then 295 again dressed in Nebraska and Iowa. But really, this cash market hasn't been moving a whole lot here as of late either. So that's not really a good indication of what could be coming in the futures, Bryan.
Goes back to what I had indicated. I think both bulls and bears have something to argue here. I'm arguing the market's starting to look a little stale. It lost that strong upward momentum. Let me give you some perspective. So I talked about the last month of trade, and we're basically at the same level. If I go from July 12th and look at something like October or June 12th, we went from 180 up to about 189 to 190. So I had a $10 gain in that window. Now our window's flat. So those things concern me. I don't see any help coming out of like China right now. I just didn't like the news out of China this week. In addition, the administration is clamping down on some technology issues and what they're not going to work on with China apparently, or let our corporations work with China. So again, tense situation. Probably not the kind of clicking on cylinders you want to see if you're bullish.
Hogs, any notes there? A couple days down, kind of the same story though. We're getting to the end of summer grilling season, I have to think, Bryan.
I think so, and yeah, my instinct is that these October, December, February, boy, they're just undervalued. We saw that before, where we keep trading this discount, and then things come to life. And case in point, look at the August contract there. That was sliding under 80, got down to around 72.5, and lo and behold, here we are at 102, and still below the cash index. So the fall isn't necessarily the time of the year we expect cash to peak, but the market's already got, I think, the valley factored in. I'm not a bear on those deferred months. I think, I've talked about slowing economy and consumer choice and all this thing. I think that all plays into more support for hogs than it does cattle.
Bryan, any thoughts on the dairy market here as well today?
Another disappointing day with red across the board, yet cheese prices were a little bit higher today. It's been very light volume, low impact, just kind of concerning that they're like any other almost commodity this year. We can't sustain upward momentum and get to a new level. We rally up and drop back. Now we're consolidating. As someone who's probably long-term support of prices, since I think we've kind of paid our dues with the front month contracts down in the 13s, 14s, and 15s, a little disappointed we haven't kind of picked it up a little more and held some of the recent gains, but we're consolidating. So I'm not complaining. We're consolidating, but the market did have some up days early in the week, and it just gave those back. So a little bit disappointing. We can't carry on the momentum in milk, much like we did on the front month hogs and cattle this whole year.
Well, Bryan, great thoughts. And I know if folks have questions, want to reach out to you there at Total Farm Marketing, there's a lot of great ways to get in touch. How can they get a hold of you, Bryan?
Yeah, so Jesse, I would ask that they just give us a phone call, 800-334-9779. That's probably the easiest route to go. The other route is to shoot me an email, Bryan with a Y, so it's Bryan, at totalfarmmarketing.com. And then we've got a website, totalfarmmarketing.com. You can always navigate through that. And there's lots of good resources on there for you.
Fantastic. Bryan Doherty with Total Farm Marketing. Always great to talk with you, my friend. Have an awesome weekend. We'll talk to you next week.
Okay, Jesse, thank you. Much appreciated. Have a great weekend.
And that's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.